Deputy Will Murphy.
Thank you, Chairman. Thank you, Mr. Cowen. Mr. Cowen, in paragraph 23 of your opening statement, you state that a liquidity group chaired by a central bank official was established in early 2008 to obtain and disseminate information on liquidity developments from the main credit institutions and to identify any potential problems. Can you just elaborate on that group and what exactly it was?
Well, to get more up-to-date information on a weekly basis and ultimately, I think, on a daily basis as the crisis intensified, to have up-to-date information, market information from these banks as to what the state of play was in respect of their liquidity position.
When was it established? I mean, it says early 2008, but do you know exactly?
I can't give you the date of it. It was in early 2008.
And was it part of the domestic standing group, or was it a separate structure?
It would be an offshoot of it, if you like. It came as part of that process of coordination.
And did it report directly to you, or to the department, or to the domestic standing group?
It would have reported directly, I think, from the department point of view, probably to Mr. Cardiff.
Okay. And will Mr. Cardiff then report to you? I mean, will you?
Yeah, in respect of any developments or trends, I'm sure he would come to me if there was something arising that needed to be conveyed to me.
So are you satisfied that you were aware of the up-to-date liquidity position of the banks once this liquidity group had been established?
Well, I obviously felt that it was an improvement on, rather than people getting various information from their various bodies depending on who they knew. It was better to have a coordination and someone who would organise that information to be collated on a more formalised basis.
We've had evidence in the committee to date on the Green Jersey agenda in March 2008. Are you familiar with that term and what that agenda was?
I've heard about it.
So this is with the governor and the financial regulator going to the Irish banks to ask them to lend to each other because of funding difficulties at the time. Were you aware this was happening at the time, that the governor and the financial regulator was making this approach?
I don't know, was I directly aware from them, but obviously I was being assured that everything they could do was being done to make sure that liquidity issues were dealt with within the system as a whole, and that if people could help out in what was seen as a more temporary difficulty, then that level of cooperation that might have been there in a normal competitive position should be considered by, and that the authorities were thought that would be a good thing to be doing.
At the time, the pillar banks wouldn't lend to one particular institution, Irish institution, and another Irish institution couldn't borrow from anyone at all. So, do you know, was this Green Jersey agenda set up for one particular or two particular institutions, or for the system as a whole?
No, I think it was again back to the point where the authorities, were probably trying to engage the banks to think beyond their own immediate concerns and recognise that it was in the interest of all of them that the Irish system be as well funded as possible in a difficult situation.
Were you aware at the time that it didn't work?
I was aware at the time that probably there wasn't sufficient cooperation between them for it to work.
Were you worried about that?
Well, at the end of the day, it probably pointed out that people were worried about their own situation too. This liquidity thing was tightening all the time, and there comes a point where commercial imperatives and duties to your own shareholder take quick precedence over any suggestion that you try and work collegiately.
The financial stability issues paper that's on page 3 in volume 4 of the document from January 2008, which we've discussed previously, or earlier, excuse me. It talks about this idea of ELA, and that basically being the last kind of port in the storm because of the lessons learned from Northern Rock. On page 5, as the recent liquidity difficulties at Northern Rock have shown, while an institution may be illiquid but solvent, the public perception of a requirement for ELA is that the institution is in trouble and at risk of collapse. The announcement that Northern Rock would receive ELA from Bank of England triggered a bank run, which was only stemmed by the Chancellor's announcement of a 100% guarantee for deposits in Northern Rock. Was the purpose of the Green Jersey agenda to prevent any particular institution having to access ELA?
Well, obviously, if it was possible at all, I mean, it's never your first option to head for emergency liquidity assistance, simply because if the market becomes aware of it, or if competitors become aware of it, or people who operate in the market become aware of it, they can put you under greater pressure again. So, your question was specifically?
What was the purpose of the Green Jersey agenda? To avoid the banks having to take ELA because of the market perception concerns?
Well, that may have been one of the reasons behind it.
Is it fair to conclude then that one of the banks or some of the banks were already at that Northern Rock position then, in March 2008?
Well, that didn't happen to be the case because, as I say, things moved along until September. I mean, there were obviously people were having some difficulties at various times of the year, but the bottom line was on the ELA question. It seemed to me that the Northern Rock situation sort of made them very wary about an ELA option because of what might happen as a result of markets getting to know about it.
That's clear from the scoping paper. When Patrick Neary was before us in the inquiry, and we discussed this, he said the approach was made because they wanted to avoid the use of public money. So was there a risk of public money having to go into an institution or some of the institutions at that point in time then?
No, I mean, we had no discussion about public money going into the institutions at that time.
When I asked him...
It would be the case that they were looking for, as was sort of the view that when there's difficulties in the banking system, can you find private sector solutions? That's what they think in broad terms.
When I asked him why it hadn't worked, he said that when they approached the banks to lend to certain institutions, that the banks would only consider this if it was guaranteed by the government. Were you made aware of that at the time?
No, it never came to that, actually. So it never... There may well have been discussions. I think you have to understand that the regulator can have discussions with banks A, B, C, D, E, and F without telling the rest of them what he's doing and not necessarily telling me either. I mean, he has a role to play himself. I wasn't aware. I don't recall being told that at that point there's a need to consider guaranteeing liquidity cover from Bank A to Bank B.
The foreign distortion company close by to you there, so I'm just asking members to be mindful of their devices, not yourself.
Thanks, Chair. But just in hindsight, because you weren't aware at the time, what does it tell us when the financial regulator and the central bank feel the need to go to certain institutions in the state to ask them to lend to others because they don't want to risk public money, and the bank's response is, we'll only do it if we're guaranteed with public money?
Well, I mean, that's the best position that they're going to come up with, isn't it? I mean, they'll look for the best deal they can get when they get a request like that.
What does it tell us about,
Well, it tells us about, obviously, that there are liquidity strains all the time, and what the regulator and the central bank governor are trying to do is make sure that there isn't further instability in the system.
Oh, and you don't happen to have your mobile device switched on by any chance?
Sorry, I
could be.
brought it with me this time and without knowing I was doing it.
Stop the track a second.
Am I the culprit, Chairman, yeah?
Can make value judgments, Mr. Cowen.
Jacques Hughes.
If mobile devices were a hanging offence, Mr. Cowen, it would be probably just me and you talking to one another at the moment. Okay, we're back in order.
Sorry, thank you, Chair. Sorry, just to try and return to that point. Regardless of what motives the banks might have, the concerns of the regulator and the central bank, and obviously the concerns of the government, given the stability of the scoping paper in January, in hindsight, what does it tell us about the liquidity situation of the banks and what action perhaps should have been or could have been taken at the time by the government?
Well, I mean, I can get into conjecture and all of this at this point, but the bottom line was that it was felt at all times here that they had a situation that they could manage. That's basically the point, that the authorities were managing the situation. And I suppose it only comes to the point where they can't manage the situation, where they come to say to us, we've a horse of a different colour here. This is now becoming something else than just liquidity constraints.
When who comes to us? Is it that the banks come to the government?
Or the authorities.
The authorities, okay. What I'm wondering is at what point, though, at what point should the authorities have gone to you, given the work that was done? I mean, if you look at the scoping paper again from volume 4, it outlines 3 scenarios. One is an institution that is illiquid but solvent. Second is an institution that is insolvent or approaching insolvency. And on page 7 it says, if a period of illiquidity continues, it is likely that an illiquidity institution will move closer to insolvency. And scenario 3 is, I can't find it here, sorry, but it's where it might be a case of either, but I can't tell because there's so much market turbulence at the time. So this has been looked at in January of 08. insolvency potentially is mentioned. And in March of 3 months later, 3 months later, you have the financial regulator and the governor of the central bank clearly worried about the liquidity position of at least 2 banks and looking for private sources of funding because they don't want to risk public funding and they don't want to risk ELA.
I tell you with hindsight that it was a pity we hadn't more proactive work done at that time to get a full handle on it. I mean, you can say that now.
Proactive work done
by the authorities in their interactions with the banks.
Okay.
Now, what powers they had to go in and do that, you have to check under the 2003 Act. But the bottom line is that there was this huge fear, it seems to me, about any information getting out into the marketplace about anyone in difficulty. And that there was all this sort of secret discussion or, confidential discussion going on. Constructive ambiguity is, I think, one of the phrases that's used in the document, so as to ensure that people don't get a view of something that could have unforeseen consequences and cause even bigger problems than what you're trying to solve.
I mean, you said that the authorities should have been more proactive, and you question as to whether or not they had the powers. But
questioning that, you're asking me in hindsight, what's it tell you? It tells me that it's a pity we hadn't a clearer picture, which would have required more intensive work being done at that time.
Did they not have a clear picture, and that's why they made the approach?
Deputy.
Did they not have a clear picture of the liquidity problems, and that's why they made the approach?
Well, it was always said to me that it's a liquidity issue, and we're working on dealing with the liquidity issue. And that they were left to do that on the basis that they had the relationships with the banks, and they needed to make sure that the system functioned. And that's where it was. At no stage they come back and say, no, it's something different.
But in the scoping paper of January, just a few months earlier, it did talk about how a liquidity problem could become a solvency problem. And it did talk about how even a suggestion of the need for ELA could bring about that problem.
Deputy.
Yes, so what that tells me is, it's basically the contingency, the comprehensive scoping paper sets out, I know it refers to all these things that yourself and Deputy Graham referred to, but there had a lot of work had to be done to bring that scoping paper, if you like, to be fleshed out. What were the legal issues? Have you spoken to the Attorney General on this, on resolution? No, we have a problem. Have we got how do we propose starting a protection legislation that ultimately we got probably by June, July? These issues were being worked on. But on the liquidity question vis-à-vis individual banks and institutions, that was being managed by the authorities themselves. And I say doing it on a basis that was very fearful of any market knowledge about what it was they were trying to achieve.
But just on the market knowledge point, because in January of 2008,
I do have to move on. Can I just ask you to supplement with this?
Well, it was just about the advice given to sell shares in Irish institutions. And I think that's the figure here. That was in January from...
You're in the new line of questioning.
Hedge fund. No, it's exactly related about knowledge in the market. 34% of Irish bank share value went in 2 hours on the 28th of January because advice was made to sell shares in Irish institutions. So the market knew what was happening.
Yeah, the market, along with other bank shares in other countries, were obviously attacking the bank shares. What the authorities were trying to do is, regardless of what sentiment there was in the market, in terms of share price and who was buying and who was selling shares, they were trying to make sure that there's sufficient funds in the system. They were agnostic, if you like, on that point. They want to make sure we have funds in the system to keep our system going. And if it meant talking to various banks about arrangements, informal or otherwise, as to how they could do that, their overall preoccupation was keep this system functioning. We're working in a tighter liquidity situation than was the case 12 months ago, 8 months ago, 4 months ago. And they're all the time trying to make sure that liquidity situation doesn't become critical. That's as I see the work that they're doing.
Thank you.